This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hi, everyone. Welcome back to The Wealth Puzzle with Michael Mansfield, and I'm Tana Pennington. It's been a while for me, but
Howdy.
You were here last week, right?
You were here last week, Tana.
Was I?
Crazy. You weren't here for like 2 months before that.
Okay.
Tana's not on an even keel right now. She just got back early this morning. She was finally able to get rid of her second oldest child.
I haven't gotten rid of him
over the weekend. Well, a little bit.
He got married. We're so excited for him.
So she just got back early this morning.
Yeah.
And she texted me and said, "Hey, do you need anything today?" And I said, "We got to make a video. It's Tuesday. We make them on Monday. I've been waiting patiently." So
right. I know. Busy week. We've got the U.S. House Speaker McCarthy and President Biden meeting this afternoon regarding the debt ceiling.
Yeah.
Oh.
Yeah. Well, let's think about how that goes. I'll be like,
right.
I mean, that's I'd have to go sit on the floor. I'd have to remove my chair and sit on the floor to show how much faith I have over that going well.
I know. Painful.
What's a shame is what McCarthy's proposing is actually extremely practical, financially responsible, a huge improvement to our fiscal crisis. In the past, we've talked about the deficits and the debts and things of that nature. The federal government in the first half of their fiscal year, they ran a deficit of $1.1 trillion. And COVID's over.
Yeah.
Where are we spending all this money? That's only halfway through the year. It's utter insanity. And so McCarthy's going in saying, "Look, dude, here's some of the things that we can do to try to get this under control. But if we never get the money clown car of the U.S. under control, we're going to destroy the dollar. We're going to destroy this country. We're buried in debt. It's utter insanity."
More recession.
I took ownership of that thought. Well, it drives me nuts. I'm very fascinated to see what happens in this meeting. I just have absolutely no faith. If Biden wants to get reelected, he better start figuring out how to not be so extreme about things. He's so busy worrying about your dishwasher's energy output while this country is crumbling at the edges.
Yeah. And we've got CPI coming out tomorrow.
It's never ending.
I know.
It never ends. It never ends.
I know.
How's CPI looking?
I saw a report from the Federal Reserve of Cleveland, and they were estimating that it was going to increase to about 5.2%, which is a bummer because we were hoping that we were going to see that number go down. But yeah.
Yeah, if we've learned anything, though, from Federal Reserve estimates is they always seem wrong. Remember the feds, they use the same now tracking for the GDP. And the day before the GDP announcement a week or two ago, they said it was like, what was it, 2.5%? And then they're like, oh, it's 1.1. Ooh. So who knows? So Tana sent me over the website here. So the Federal Reserve of Cleveland, they've got April estimated year-over-year CPI inflation at 5.2%. To put that in perspective, you can kind of see on this chart, far right, the previous month it came in at 5%. So they're talking about it ticking up. I think for me, where you got to be conscious of what that means, though, is remember the money supply is contracting.
Right.
We created a lot of this problem. I beat the dead horse of money supply constantly, right? If you print a lot of money, besides devaluing the dollar, you create inflation.
Yes.
So we did that. We now have the money supply rolling over. Oh, here's the prettier chart. So U.S. money supply, the most obvious measure of it is what we call M2 money supply. And so if you're watching this on the screen on YouTube or Rumble, you see that the money supply started going up dramatically, right, in 2020 for a year and a half, and right behind it is the red line. That's inflation. So money supply goes up, it creates inflation. This is not a riddle. This is just math. And then the money supply is coming down now dramatically, the fastest ever recorded.
Mm-hmm.
Inflation is rolling over and trying to keep pace with it. So, if inflation ticks up this month, total bummer visually. But I think big picture, now that we're drying up a lot of that excess money in the money supply, hugely beneficial, right?
Yeah, definitely.
To that degree, big component of how CPI is calculated, 1/3 of it comes from rent equivalent yield. That is finally coming down. That is a lagging indicator in that CPI number. And so throughout the year, CPI, we would think, should improve pretty dramatically. If you look at CPI over the last 3 or 6 months, inflation is only averaging at about a little over 3% versus this 5.2 number they're talking about. But we'll find out tomorrow what the real number is. Woo! And I'll put on our party hats. We'll sit here and we'll watch TV like we always do.
Yep.
Those little poppers.
The confetti poppers.
Are illegal. And say, yay, there's the number. So we'll see what happens.
Yeah.
Backing up, though, the big story of the week, though, we did our show last week and we talked about, hey, look, the Fed's got to do their rate announcement. They're going to come out. The probabilities where they're doing a 1/4 point rate increase. If they do that quarter rate increase and keep their mouth shut, everything should be fine. If they do it and they come out and they start going, talking and stuff, that's what creates the havoc in the market.
Yeah.
And so here it is from last week. Well, I don't know what the headline is. It's breaking. But anyways, so the Feds raised their rates last week a 1/4 point. I don't know what's fun. Here's a chart that looks pretty. It shows that the rate increases now have us at the highest rate since August of 2007. So, we're pushing. It's been a long time since rates have been this high. More importantly, rates have come up dramatically. I mean, it's now, May is now the 1-year anniversary of when the Fed started doing rate increases. They've come up 500 basis points in just 1 year. You look at the previous rate increase cycle from 2015 to 2019. They went from 0 to what, 2.25%, 2.5%, whatever, over 3 years.
Right. Very gradually.
We went up twice as much as that in less than a year.
Right.
So we blew that out of the park. So here's what I was talking about, though, last week. I did pull the chart on this. This is a 2-day chart. This shows last week, Wednesday, May 3rd, Thursday, May the 4th be with you. Fourth be with you. And my whole office failed me. I was
going to say, did you guys end up dressing up?
I said, we're going to dress up. We're going to do our part. So let's think about this. The Fed rate increase came out right here, if anybody could see the chart. Right about here. That's hard to see. Let me draw an arrow. Right about there. You notice something, if you can see this chart on the screen, if you're watching this on TV, is for the next hour or two, the market was pretty flat. So the Feds made the announcement, like we said, a 1/4 point. That was, 80, 90% probability that was going to happen. They do this. Market doesn't care. Market already knew that. That's what everybody was guessing. And then you see the fun, right? The fun is where all this weird volatility starts to pick up. That's when Powell started talking. And this is what we said, is depending on what he says. And so when the rate increase came out, they then released the meeting notes. The meeting notes basically said that, it looks like we've probably tightened enough. I've maybe oversimplified that, but that's basically how it's interpreted. And then the loudmouth gets in front of the microphone and starts talking. And you see all of a sudden the market's going up and the market's going down, the market's going up, and the market's going down, the market's going up. Like, it's just like freaking chaos in the moment. And then he did it. He did what he always does. And he basically said, I realize the statement said we're probably pretty tight, but we probably got it. This ain't good. Nothing's good, right? And what happens? And the market just crater babies at the end of the day. I think it was down 600 points that day. And then the next morning, as everyone digests the information, how'd my arrow get all the way over there? It crater babies even more. And in over a 2-day period, you have almost 1,000-point loss on the Dow. So I feel like that's what we said was going to happen, right? So that's why today's show is called The Fed Spoke and the Market Broke. I don't understand it. I don't understand why the government has to step on their own toes with talking, right? You should you're the Federal Reserve. This isn't a political thing. This is a monetary policy thing. You're supposed to just put out the thing, put out the notes. You're unelected officials. You just do your thing and have a nice day. That's not what happened. So anyways, as Tana said, we fast forward to this week. A lot going on, right? We've got CPI tomorrow. The Fed will be coming out with notes and information about that. What you say? Oh yeah, the debt limit thing is a looming issue. There's a lot of anxiety there. The world is falling apart again. All is bad. I don't think everything's terrible. I think there's a lot of positive things going on. Ironically, it doesn't always feel like that right now, right? Because there's just so much chaos. But you look at something, maybe we'll do a show next week on this. You look at something like credit swaps. Basically, this is the risk premium that people pay for certain investments inside of the investment world. Those increase significantly during recessionary periods. And so everybody always talks about, the recession's got to be declining GDP. It's got to be an increase in unemployment. It's got to, what a recession is it's all these multiple tea leaves all over the place that then very lazily, very generically get defined as 2 declining quarters of GDP. Well, it's funny because unemployment as of last Friday ticked down to 3.4%, an all-time low or something. And then, I was checking out credit swaps this morning, and those things, they've ticked up a little bit, but not at all, not to what real recessionary pressure looks like. And so it's such a mess right now that we're probably in a rolling recession. Different parts of the economy are getting pouty at different times. And so the chaos continues. But I think, Tana nailed it, saying that the 2 big ticket items that we need to be conscious of is, what does inflation data look like tomorrow? Obviously, that's going to help steer the boat. And then getting past this debt ceiling thing. Whether the debt ceiling limit thing is a big deal or not doesn't matter. I think that people are emotionally burnt out, and everybody's always looking for a reason to sell, to be upset, to find chaos in the markets. And so we're creeping up on that over the next few weeks. So anyways, that was a little more of a depressing show, but you have our beautiful voices and faces to look at. So, I mean, that's got to be a positive. So anyways,
it's going to get better. That's what I keep holding on to. I know it's going to get better. Like, it might be sour for a little while, but it's going to get better. I know.
And I totally agree. Like, if we're going into a recession or not, doesn't really matter. The market's in a trading range right now. I don't think it's going to trade a lot lower. You need a fundamental catalyst to really bring it lower at this point. It's just pouty. But then as you look out 6 months, 12 months, 18 months, 24 months,
you just got to look further out.
The sky is bluer and bluer and bluer. Earnings will be better next year than they are this year. I mean, heck, we didn't even get into that. 85% of S&P 500 companies have reported, and 80% of them in the first quarter beat their estimates.
Yeah.
Well, I was told everything was bad.
No.
So anyways.
Life is good.
Give us a call. 805-500-7035. You can visit our main website, thelindgroup.com. Lind is L-Y-N-D. Otherwise, everybody have a wonderful day, a wonderful week. Enjoy the CPI news data tomorrow. Enjoy learning what happened in the presidential meeting tonight, and all is well.